Another round of market madness just hit. Getting old, isn't it? All right, buckle up. The stock market just face planted today, and naturally, crypto couldn't help but tumble right alongside it. It's basically a dumpster fire across the board. So what's driving all this madness? Let's break it down together. Oh, and here's something interesting. A chart analyst with a pretty big following posted this morning that XRP whales apparently just unloaded 190 million XRP. Red flag or what? I'll share my thoughts on that, but first, let me get this out of the way real quick. When it comes to finance, I've got zero formal training. Absolutely none. Nothing I'm telling you here counts as financial advice. And seriously, don't let anything I talk about influence whether you buy or sell. That's on you. XRP is at $2.02 right now, with the 24-hour low hitting $1.98. Look at this chart. It's like someone pushed it off a building starting this morning. Bitcoin's not doing any better at $87,213. Basically the same disaster unfolding here. Took a nosedive this morning. Bottomed out at $86,185. As for the Crypto Fear and Greed Index, no fresh numbers yet since it only does its thing once a day. We've got about 2.5 hours before the next update drops. Currently parked at 11 out of 100. After today's carnage, I'd bet money it either stays put or sinks even further. Seriously, it's like everything decided to burn down simultaneously. Wherever you look, nothing but red covering your screen. Check this headline from Economic Times. S&P 500 crash. S&P 500 plunges 2.5% in minutes as NVIDIA rally fades and Bitcoin crashes. Why U.S. stocks reversed after early gains today. You know what? I've been searching high and low for some bombshell news that would justify the market freaking out like this today. And guess what I found? Pretty much nothing. Yeah, I went down the rabbit hole because this stuff fascinates me. But here's what actually happens more often than not. People just start hitting buy or sell buttons, trades pile up, and the market swings. Simple as that. Sometimes the momentum just tips too far one way, and honestly, there's no deep conspiracy or dramatic reason behind it. What kills me is how everyone scrambles to pin it on something afterwards, like they're reverse engineering a story to fit the chaos. I catch this pattern all the time. So today, no smoking gun, no catastrophic event. But hey, since you're probably wondering what excuses people are cooking up, let me walk you through what I managed to dig up. Check this out from the Economic Times. The shutdown-delayed September jobs report showed 119,000 new jobs, stronger than expected. That pushed market odds of a December Federal Reserve rate cut below 40%, hurting growth stocks. Translation, the market's been crossing its fingers for the Fed to slash that federal funds rate. That's the move everyone's betting on. When those jobs numbers pop off stronger than people thought, the Fed basically pumps the brakes on cutting rates, right? And that means there's going to be less liquidity swimming around out there in the economy, the whole global system, actually. Yeah, we're zeroing in on the US right now, but let's be real, this stuff doesn't just stay in one place. You're looking at the most massive capital market on the entire damn planet. This is legitimately important stuff. It has real consequences. And trust me, the speculators are all over it. Okay, so there's this extra wrinkle that came up. The Kabasi letter spotted something pretty strange. They noted the U.S. Labor Department said the November and October employment situation will be released on December 16th. Sounds pretty routine at first glance, doesn't it? But here's where things get weird. Right here, look at this. There's what people are now calling an economic data blackout happening. What's that all about? Well, the FOMC, that's the Federal Open Market Committee for anyone keeping score, they've blocked out December 9th and 10th for their meeting, spans across both days, and data isn't showing up until after they've already wrapped everything up. So there's literally no way for them to bake it into their thinking, which pretty much guarantees they're not cutting rates. The market really doesn't like hearing that. Now, I'll be honest with you, the timeline here doesn't match up perfectly with what we saw go down today. So I'm definitely not claiming this explains the whole story. But if you're hunting for reasons, this is probably your best bet for understanding today's mess. But you want my actual take on this? I really don't think it's going to move the needle that much when we zoom out. Markets tend to work through their issues eventually. We got this news today. Yeah, the clock doesn't quite line up. Yeah, uncertainty makes traders twitchy. But this too shall pass, you know? Markets are going to find their footing again, and when everything settles down, we'll all be okay. Getting worked up about this just doesn't track. That's my 2 cents anyway. Charlie Bolello dropped this post that I gotta show you. Look, if you're panicking right now, just stop for a second, because what we're seeing here, totally normal. Not even close to apocalypse territory. Listen, Bitcoin has crashed before, XRP has crashed before, the whole crypto market has done this dance multiple times, and spoiler alert, it's gonna happen again. Future crashes are coming. That's just how this works, and I'm not sugarcoating it. So here's what Charlie Bolello put out there. He's the chief market strategist at Creative Planning, super smart guy. He crunched the numbers and said, at $86,000, Bitcoin is now down around 32% from its all-time high of $126,000 in early October. That's the biggest drawdown since April, but not unusual at all given its historical volatility. Pull up the chart real quick. See that? We already hit a 32% drop earlier this year. Go back to last year, March through August, another 33% nosedive. And hey, remember 2021? Well, technically he's talking about late 2021, but the real bloodbath came in November 2022 when FTX imploded. That disaster? A brutal 78% freefall. My point is, these crashes are part of the game. None of this means crypto is dying, because for that to happen, something fundamental has to break. Look at the fundamentals of Bitcoin, XRP, the entire crypto ecosystem. What's actually changed at the core level? Nothing. That's why the market isn't going to zero. It drops, hangs out in the red for a bit, then climbs back up, and boom, we're good again. I've been in this space for more than 8 years at this point. Every wild swing, every heart attack moment, I've lived through all of it. The overall direction? Always upward. And look, when we're talking specifically about XRP, the infrastructure surrounding it just keeps expanding. Did you catch what happened today? We got the second spot XRP ETF to ever go live in the United States. Number 2 in the entire country's history. And guess what? It's doing solid numbers right out of the gate. All right, so James Seifert just shared something pretty wild. This guy works at Bloomberg tracking the whole ETF scene, and he posted, with a bit over about 3 hours left in trading, Bitwise's XRP is almost at $22 million in trading today. Quite impressive. For the second product to market a full week after Canary Capital's XRPC, which is the #1 launch by volume this year. Okay, pause for a second. Let me paint the picture here. Canary Capital rolled out their XRP ETF, ticker symbol XRPC, and it became the biggest ETF launch of 2025. Not just among crypto products, not just in the financial sector, I mean across every single category. We had about 900 different ETFs debut in the US this year, and Canary snatched the crown. But wait, it gets better. Canary Capital isn't some giant powerhouse. They're actually pretty small. Bitwise, on the other hand, massive doesn't even cover it. We're looking at something like 30 times the size. Total heavyweight in the industry. Now look, Canary definitely grabbed some extra attention by going first. Being the early bird has its perks, no question. And Bitwise, man, their timing couldn't have been worse. They picked a day when stocks were crashing and crypto was taking a beating. Launch this thing when markets are steady or climbing, and we'd probably be looking at way bigger numbers. But even with the market looking like a dumpster fire, money kept pouring in. That's what catches my attention. Here's my point. The big players, they're playing the long game. None of this short-term chaos is keeping them up at night. Trust me on this one. They're not sweating any of it. Not even close. Matt Hogan just posted something. He's the CIO over at Bitwise, and this morning he dropped this. Very excited to launch the Bitwise XRP ETF XRP. What a journey for this asset and this community. Excited to see what's next. Look, if you're building anything in the XRP ecosystem right now, using XRP for whatever project you've got going, here's what you need to remember. Market dips don't change the fundamentals. They just don't. Go back through history. Look at every single time the market tanked in the past 13 years since XRP launched. And there have been plenty of those moments, right? Including that whole SEC lawsuit drama. But you know what? The builders never stopped building. They kept going. And guess what happened? The fundamentals for XRP just got stronger and stronger. And that's exactly what's happening right now. It's so obvious when you step back and look at it. I mean, think about this for a second. On a day when the market's pulling back, we still get another XRP ETF, a spot ETF, launching? Are you kidding me? This is literally the dream scenario. Seriously, imagine going back just a few years when the SEC was coming after Ripple and basically attacking every XRP holder on the planet. Could you have imagined someone telling you back then, hey, don't worry, in a few years, you'll have spot ETFs live? You'd think they were crazy, right? But here we are. This is real life now. And sure, XRP dipped just under $2 today. So what? Here's my take. Most of you watching this were around a few years back when XRP was sitting in the 30 to 40 cent range, right? If someone had told you back then, hey, you'll have 2 spot XRP ETFs trading, and yeah, XRP might be down on the day the second one launches, but it's hovering around $2, maybe dipping below and then bouncing back up. You would have been absolutely pumped about that news. Living in the $2 to $3 range, that would have sounded incredible. It's been hanging out in that price zone through most of 2025. And honestly, your past self would have jumped at that scenario without a second thought. XRP's basically claimed new territory here. This is incredible stuff. Seriously, these are the moments that get you hyped. Watching this unfold is pretty wild. So look, losing your cool over this doesn't track for me at all. 0 cents in that reaction. All right, switching gears for a second because there's something I need to talk about here. So Ali Martinez, this chart analyst, just put out a post claiming 190 million XRP sold by whales in the last 48 hours. Let me pull this up and show you what's actually happening here. That black line you're seeing, that's your XRP price action. We're looking at data starting from somewhere around the first week of August. Now glance up at that gray line sitting above it. That's measuring the combined XRP balance across every wallet holding 1 million to 10 million coins. Now buckle up because here's the twist. Ali's chart is basically screaming the exact reverse of his headline. What's really unfolding here is institutions piling into XRP, not dumping it. Let me show you why I'm confident about this reading. I'm choosing to believe he genuinely misinterpreted his own visual here. I'm hoping this was just an innocent mix-up on his part. But consider the reach we're talking about. This hasn't even been posted for 12 hours, and we're already at 77,000 eyeballs on it. That's climbing by the minute. And it's not a one-off situation. This pattern keeps repeating in his content. First, we need to get crystal clear on what this chart is actually capturing. It's not a head count of how many whale wallets exist. What you're looking at is the aggregate sum of XRP tokens scattered across every individual wallet that falls in that 1 million to 10 million range. I'm drilling this point because without understanding that foundation, everything I'm about to unpack will just fly over your head. When heavyweight institutions decide to accumulate XRP, they don't just carpet bomb exchanges with gigantic buy orders. Why would they pull a move like that? Because it would send prices rocketing upward immediately, right? They're filling orders at whatever price the market's sitting at right now. But here's where things get tricky. They've got to scoop up some XRP at a higher price because, and this is key, only so many folks are willing to part with their XRP at today's going rate. The moment those sellers dry up, if you're still hungry for more, guess what? You're buying from a completely different crowd who won't budge unless the price goes up. Let me paint you a picture with some made-up numbers just so this clicks. Imagine XRP is chilling at $2.10. Totally random number I'm throwing out there. So we've got XRP at $2.10, and say there are 100 sellers with their stash listed at exactly that price. Now here's the million-dollar question. What goes down when some massive whale rolls in and gobbles up every last bit of XRP from all 100 of those sellers? What's the aftermath when that whale clears out everyone who was selling at $2.10? Because obviously that supply just vanished, right? Here's where the plot thickens. If our whale buddy still wants more action on that exchange, They're forced to buy whatever XRP is sitting there at steeper prices. What if the next batch of sellers won't budge unless they get, I'm improvising here, maybe $2.15 per XRP? Boom, that's what the whale pays. Simple reason, 0 sellers left at $2.10. But wait, it doesn't stop there. When everyone at $2.15 gets bought out too, guess what happens next? You're climbing another step up the ladder, buying from folks who demand even fatter prices for their holdings. See the pattern emerging? When whales go on these aggressive buying sprees, the exchange price for XRP shoots up like a rocket, which ironically becomes a major headache for the whale itself. Whales need their massive order filled at today's price, whatever that happens to be. Picture this, they buy half their stack, the price jumps, and suddenly they're stuck paying premium rates for the second half. Even though they're hungry for more XRP, nobody wants to watch their cost per coin climb while they're still shopping, you know? That's exactly why they skip the regular exchanges altogether and go straight to OTC desks. OTC, that's over the counter if you haven't heard the term before. These are basically secret liquidity brokers who've built their entire business around moving enormous chunks of crypto without causing a scene. Picture yourself as a whale for a second. You contact an OTC firm and drop this bomb. I need an absolutely insane pile of XRP. Let's say $50 million worth, just to keep things interesting. You're dealing with one contact point, but here's where it gets fascinating. That firm becomes your personal crypto hunter. They'll scatter across different sources, piece together your order from wherever they can find it, and deliver the whole package to you. That's the whale playbook. These big players aren't creating accounts on Coinbase like regular folks when they're throwing around that kind of money. Think about it. Would that even make sense? They're not sitting there refreshing Coinbase and tapping buy repeatedly like we do on our lunch breaks. They're operating at whale scale. So OTC desks become their go-to solution. Let me break down how OTC desks actually pull this off. When they need to fill a monster XRP order, they're hunting through their network of whales. We're talking multiple heavyweights here. Here's the wild part. A whale places an order with the desk, and that desk turns around and taps other giant holders, who are whales in their own right, to supply the goods. You've got whales feeding whales, essentially. The supply chain includes spots like major exchanges and crypto custodians, but the transaction itself, it happens completely off the grid, never touches public order books. Get this though, even when portions of that order get sourced from an exchange, which definitely happens, it stays under the radar. Why? Exchanges are sitting on absolutely ridiculous amounts of XRP in their reserves. Let me paint you a picture with Coinbase. They're obviously holding everyone's XRP who banks with them, but separately, they've built up this gigantic treasure chest of XRP that's theirs outright. Now, when you fire up your Coinbase app as Joe Customer scrolling through available crypto, you're never seeing Coinbase's private reserve anywhere on your screen. That inventory is completely hidden from view. There's no button to tap into their personal vault. Yet Coinbase has full freedom to offload pieces of their XRP mountain through private channels, and the general public stays completely in the dark about it. Zero footprint appears in public order flow. That's how they operate. You're staring at your screen, watching the price, and it's barely twitching, right? Meanwhile, there's this whole ocean of buying happening that you can't even see. Tons of XRP changing hands, but your chart, dead silent. The reason is simple. These moves are happening in private deals, completely disconnected from the public exchanges where price discovery actually happens. OTC transactions basically cloak the real appetite for XRP until way later. This is exactly why you won't catch a sudden moonshot when deep-pocketed institutions start loading up. Imagine an OTC broker pulling 20 or 15 million XRP straight from a whale stockpile to satisfy some big buyers. Yeah, that whale stack shrinks. But here's what's wild. Those tokens never touched an exchange order book. They just jump ship directly to new owners through back channels. I needed to spell all this out because now we get to the juicy part. Pay close attention to what I'm about to say. This completely dismantles Ali Martinez's theory that whales are liquidating their positions. Once institutions grab that XRP, where does it go? usually into wallets that are already stuffed with ridiculous amounts. Think anything over 10 million XRP, sometimes 20 million XRP, sometimes 50 million XRP, right? Or it might get divided into tinier wallets holding under 1 million XRP. No matter what happens, these coins exit that 1 to 10 million XRP category completely. That's the exact data I'm referencing here. Ollie Martinez is zeroing in on that particular bracket. It's literally one slice of the pie, 1 million to 10 million XRP. Numbers migrate below it or jump above it. That doesn't signal whales are frantically offloading their XRP. Take another look at this chart here. Let me hammer this home again. The chart monitors an XRP whale segment ranging from 1 million to 10 million. All right, let me paint you a picture here. A whale decides it's shopping time and places this absolutely massive order for XRP. Now, here's where it gets interesting. Part of that order gets filled from a wallet that's sitting pretty with 1 million XRP. The moment that trade goes through, bam, that wallet dips under the 1 million threshold. What does that mean? Well, technically speaking, we've got one less whale in that 1 million to 10 million club now. But wait, and this is the part everyone seems to be missing. This isn't happening because someone's panic selling. This is pure raw demand driving this. We're watching buying pressure in action here, not selling. Now stay with me because this next part is crucial. That chunk of XRP the whale just scooped up, it doesn't just disappear. It gets moved into an account that's already stacked with 20 million XRP. You glance at Ali's chart and see those numbers declining, and your first instinct might be to freak out. But that's exactly the wrong reaction. What's really going on is that demand got so intense, whales literally vacuumed up the available supply. The metric dropping on his chart? Sure, it's heading down. But the reason isn't what most people assume. This isn't whales hitting the panic button and flooding exchanges with sell orders. What's actually happening is institutions are quietly scooping up XRP behind the scenes through off-exchange deals. Once you see it, it's pretty obvious. Want proof? If whales were really unloading massive amounts of XRP onto exchanges, the price would be cratering right now. But check the actual price action over that same stretch. It's been trading pretty much sideways, just bobbing up and down following Bitcoin and the broader crypto market's rhythm. Eli Martinez needs to take another look at his analysis because what he's saying about this chart is just flat wrong. He's claiming it shows whales liquidating 190 million XRP over 2 days. That scenario didn't play out. Could some major holders be unloading positions? Possibly. Here's the reality. This dataset isn't backing up his theory. Not even close. Want to know the dead giveaway? Check the price action during that window. When those holdings shift, they're relocating to different wallets. It's circulation, pure and simple. Off-exchange deals are happening, everyone. The chart he's interpreting, it's telling a completely different tale. What you're actually seeing is XRP moving between addresses. Full stop. Destination, motivation, the chart stays silent on those questions. Walk through the logic here, which is precisely why I broke down all those details earlier, and there's only one reasonable takeaway. Crystal clear. Nothing in this data supports the whales dumping narrative he's pushing. The evidence? During that exact 48-hour stretch, XRP tracked horizontally alongside every other asset. Standard market behavior. Bitcoin's recovered some altitude since then, trading at $87,588 as I close out here. XRP parked at $2.03. Real talk, pinpointing the exact bottom, beyond my capabilities. The ultimate depth of this correction, anyone claiming certainty is bluffing. All right, listen up. We need to talk about perspective here. This isn't some apocalypse scenario. You're gonna be okay. Breathe. You know what? I've survived some absolute chaos with XRP. I'm talking about when it plummeted all the way down to 10 cents. I was right there watching it happen. And that bloodbath happened before the lawsuit drama even kicked off. Then came the actual legal battle, and boom, we're back at 16 cents. I've weathered storms that would make today look like a light drizzle. So here's my take. The foundation underneath XRP right now, stronger than it's ever been. period. If you're someone who gets it, who understands that real-world utility is what separates winners from losers in this space, then you already know what I'm talking about. That's literally why I put my money where my mouth is. When you recognize that the core strength is there, and when you're willing to play the long game, however brutally long that might be because nobody's handing you a calendar, then you're golden. You can't summon a bull run out of thin air. That's not how this works. But you can make sure you're positioned in XRP when that inevitable surge hits, and it's coming. That's the entire playbook. I'm not your financial advisor. Don't make buy or sell decisions because some guy on the internet said something. That's a recipe for disaster. See you next video.